Hi everyone, Dr. Justin Golson here. And in this video, we're going to provide an introduction, a lesson into cryptocurrencies. So I will say in a number of videos that cryptocurrencies are just one use case for blockchain technologies, as well as NFTs are just one use case for blockchain technologies. So this is a great article from 2020. And I purposely pulled an older article to demonstrate how far we have come in a few short years. So once again, this article provides you with the foundation. This infographic provides you with a history of cryptocurrencies. And one thing I would like to point out is that this article from 2020 touts that the cryptocurrency market has exploded to a $200 billion industry, right? Now, I want you to keep that $200 billion in mind, in that was only 2 years ago, because we're going to see what the market cap of cryptocurrencies are today. So in terms of cryptocurrencies, a number of you have heard of Bitcoin. And Bitcoin was created by Satoshi Nakamoto. And some people will say that Satoshi was a group of people. Some people will say that Satoshi has passed away. Some people will say that Satoshi still walks among us. I just attended the Bitcoin 2022 conference in Miami this past week, and Satoshi may have been there on the stage presenting, about the future of Bitcoin. Who knows, right? So there is a lot of conspiracy theories out there on who Satoshi is, or the group of individuals who Satoshi could be. But that still remains to be seen who Satoshi actually is. So Bitcoin was created in 2009, and since then, a number of offshoots or forks have been created, such as Litecoin. So Litecoin is a fork of Bitcoin where they use the Bitcoin protocol as the foundation, and they created another coin, another token, another smart contract that people can invest in. Okay, now for Bitcoin, Bitcoin is what I refer to as a store of value. It can be similar to fiat, right? In that you can exchange Bitcoin, you can exchange Litecoin for goods and services. Okay. You've also had a number of other early cryptocurrencies, such as Ripple. And then in 2013, the price of Bitcoin went to $1,000. Now you'll see in the next portion, in the next section of this presentation, that Bitcoin is a little bit higher than the $1,000 it was in 2013, and then we'll get to that shortly. So fast forward to 2015, that we were introduced to Ethereum. So Vitalik Buterin, as well as Tyler Hoskinson, who is now the founder of Cardano, and Dr. Gavin Wood, who was the founder of Polkadot, created a new blockchain, created a new token that introduced us to utility. So instead of being a store of value like Bitcoin, Ethereum created utility where you would actually pay gas fees, you would pay transaction fees for the protocol to execute transactions on the smart contracts. So Ethereum was one of the first protocols to allow you to pay gas fees for NFTs, to purchase NFTs, to mint NFTs, so to create NFTs. We'll get to that within the NFT video. So since Ethereum, there have been other tokens that have emerged, and to provide what we refer to as utility to the blockchain space, to the crypto space. Okay. Now, fast forward to 2017, there were over 1,000 cryptocurrencies listed. So whenever we say cryptocurrencies listed, anyone could essentially create a cryptocurrency. Now, there are legal ramifications to anyone creating a cryptocurrency, because if you are providing or saying that you're going to provide value or financial gain, that's a security. So a number of these cryptocurrencies have gotten in a hot water because they are essentially securities. So they have to file within the United States, have to file with the SEC, the Security and Exchange Commission, and some of them do not. So they have gotten into some trouble because of that. So you have to do your research. You have to develop an understanding of these cryptocurrencies, and that's why we have an entire course on cryptocurrencies alone. Okay, so as 1,000 cryptocurrencies were introduced in 2017, more and more cryptocurrencies have come onto the scene. Again, in the next section of this video, we will talk about we'll discuss the number of cryptocurrencies that are here in the present state. Okay, now in this 2020 article, they were saying the future of cryptocurrencies was in decentralized finance, DeFi. There's going to be a full video on what DeFi is. And as more and more people are introduced to DeFi, DeFi is going to disrupt the centralized financial system, the banking system, in that we can borrow from each other within the DeFi space. Okay, we're going to talk more about that shortly. So, in going through these terms, once again, cryptocurrencies, there are thousands of cryptocurrencies today, and all cryptocurrencies are not created equal. But I will say that at the current state, the cryptocurrency market is driven by the price of Bitcoin. So as the price of Bitcoin goes up and down, the market goes up and down. And you'll see the market dominance of Bitcoin and why that is the case. Within blockchain, we're going to, so although Web3 is more than just blockchain, in my opinion, blockchain is going to be the foundation of Web3. Web3 is the next iteration of the internet, right? And the ultimate goal, the ultimate vision is that it will be decentralized. It will be owned by the people. The internet will no longer be owned and ran and controlled by the Amazons, the Googles, the Metas, formerly Facebook, right? It will be ran, owned, and controlled by the people. Smart contracts. So when we say smart contracts are the protocols that will execute based on certain transactions. Now, the term smart contract is not a great term because it is not really a contract itself. It is a protocol that is self-executing, right? Now, it can be anonymous. So previous state, the transactions on the blockchain were anonymous. Now they can still remain anonymous, but with the introduction of things such as Ethereum named addresses, ENS addresses, you can create an identity to your wallets in the Web3 world, right? So some people want that, but then some people continue to want this anonymity within the Web3 world. And we'll get more of that in another video. So the one thing that a lot of people fail to understand when they're early within the Web3 world, within the blockchain world, within the cryptocurrency space, is that once again, all these cryptocurrencies are not created equal. Okay, there's going to be some tokens, some cryptocurrencies that they have a primary use case. Bitcoin, its primary use is for payments, right? It's a store of value, just like fiat, just like your local currency, right? And there's other currencies that are used for payments. And once again, I'll keep referring to Bitcoin as a store of value. Some people say that Bitcoin is referred to as digital gold, gold is a store of value. Bitcoin is digital gold, is a store of value. Okay, so one use case that's used for cryptocurrencies and that you're going to see more and more of emerging is stable coins. So stable coins have a large presence, a large impact in terms of decentralized finance, DeFi. So the use case with stable coins, or the purpose of stable coins, is that they are pegged against the US dollar. In most cases, in many cases, it's pegged against the US dollar, or is pegged against gold. So there is something backing that particular currency. So if you have stablecoin, and if you need to borrow some money, so I have $12,000 in stablecoin. If I need to borrow $10,000, I can collateralize my stablecoin. I can collateralize my $12,000 in stablecoin, and I can borrow, in most cases, 80% of what I collateralized. So if I have $12,000 in stablecoin in DAI, or USDC, or USDT Tether, I can get $10,000 back. So I can take that $10,000 because I collateralized my $12,000. I can get that $10,000 back and do whatever I want to with it. Now, instead of paying these high transactions, these high interest rates, like with the bank, they're small rates, 3%, 2%, okay, rate. So, but in some cases, in some DeFi protocols, you can actually get paid to borrow against your own money. And that's because you are providing liquidity to those protocols, to those exchanges, if you will. So the way exchanges work is that the more liquidity that they have, the more people will come to their protocol to borrow money to transact on those particular protocols. Okay, so really, in some cases, you can actually borrow, you can actually collateralize your stable coin, you can borrow against your stable coin, and then because they're paying you to borrow, they're paying you to collateralize, to store your stable coin, your loan could actually be paying off itself. Now, that is a little advanced DeFi that we do within this space, but it is one thing that a lot of individuals are doing within the crypto and blockchain space. Now, also another use case is privacy. So there are some blockchains that are, there's some cryptocurrencies that's used for privacy to make those transactions anonymous, to make those cryptocurrencies anonymous. But to counter issues such as money laundering, for example, there are other protocols in place to identify dirty crypto, that we call it. Right. So although you have these privacy coins, there are other tokens, there's other protocols, there's other cryptocurrencies that will identify whether or not those transactions were used for things such as money laundering. Digital ownership. So the Web3 world is all about digital ownership. And there are a number of tokens. Again, this article is 2 years old. There's a lot more tokens, a lot more cryptocurrencies that provide digital ownership within the Web3 world. Once again, we talked about Bitcoin being referred to as digital gold, and then decentralized applications. In my opinion, the king of decentralized applications, the king of people that are building upon that particular protocol, is Ethereum. So when people are creating NFTs, non-fungible tokens, they are building on top of Ethereum, and they are receiving payments for those NFTs in Ethereum. And then those people that are purchasing those NFTs are using Ethereum to pay for transaction fees. So similar to how we pay, a fractional charge for credit card transactions, in some cases, similar to how businesses are charged fees for transactions, credit card transactions. That's essentially what we mean by gas fees. They're transaction fees on the blockchain, and a number of these protocols now are charging transaction fees or gas fees, if you will. Okay, so once again, this is just a graphical representation of how these cryptocurrencies are used. And once again, you have Bitcoin, which is the leader in the store of value. So you see Bitcoin, the fork of Bitcoin is Bitcoin Cash, for example. Litecoin is another fork of Bitcoin. Then you have Ethereum. So Ethereum is used for payments. Ethereum is used for utility. Okay. And then a number of these are also used for, again, those gas fees and transaction fees. Okay. So as we go into the institutional aspect of blockchain, the institutional aspect of crypto, you have a number of players that have entered into the market. So institutional investors, especially in like 2020, we have seen a number of hedge funds that have made significant investments in Bitcoin and Ethereum. So those are the major players within the crypto space from an investment perspective. You also have Coinbase, that's actually a public company that is a centralized exchange where anyone can go in and deposit fiat, deposit dollars, right? Your local currency, and then you can actually trade cryptocurrencies, and then you could actually use that cryptocurrency, or you can purchase Bitcoin and store it for savings. Okay, similar to a stock. Now you also have players such as within the tech industry of IBM, Microsoft, where they're actually leveraging blockchain for institutional use cases. Once again, crypto is just one use case for blockchain. IBM is actually using blockchain for to increase transparency throughout supply chains in the world. And in another course, we're going to talk about those institutional use cases for blockchain. JP Morgan, Fidelity, they're actually doing investments. So some of these large banks, some of these centralized banks are providing cryptocurrency investments for their large investors. And you're going to continue to see that emerge around the world. Okay. The public organizations are so central banks within certain countries are using cryptocurrencies for investments. And then you also have countries such as El Salvador that is using Bitcoin as their local currency, as local tender. Okay. And then in terms of decentralized applications, dApps, you'll hear them referred to as dApps, you'll hear them referred to as dApps. So in the first week, you all set up a MetaMask wallet. So a MetaMask wallet is referred to as a dApp, a decentralized application, where MetaMask will store all of your cryptocurrencies. You can use MetaMask to transact to purchase NFTs, for example, on platforms such as OpenSea. You can transfer cryptocurrencies to and from individuals using that decentralized application. And then you also have certain banks in certain parts of the world. You don't see it that much in the US, in certain parts of the world, where you can have crypto banks, right? So we're seeing an emergence of cryptocurrencies within the world. And so this is one article that was published in 2020, as I said. So now let's fast forward to 2021. So within 2020 or 2022, in 2022, if I go to one of the main pages, the one main websites that I go to is called CoinMarketCap. And within CoinMarketCap, you can see up here at the top, there are today in 2022, there are 18,000 835. It might go up once I refresh the screen. There's over 18,000, close to 19,000 cryptocurrencies to choose from. That's a lot. And whenever you're making an investment, that can be very difficult to choose what's going to be the primary cryptocurrency to invest in. So that's why we always say do your own research. And then also from a cryptocurrency perspective, you have to understand what that cryptocurrency is being used for. What's the utility of that cryptocurrency? That's why some people shy away from what we refer to as meme coins, Dogecoin, Shiba Inu. Now, there are some institutions, some organizations that are accepting Dogecoin and Shiba Inu, such as I think AMC movie theaters are accepting Shiba Inu and Dogecoin for payment for movies. Now, there may be others that accept these meme coins as there's more adoption into these particular cryptocurrencies. So again, there's over 18,000 cryptocurrencies available today. That could go up to 19,000 tomorrow, right? And in the video, in the previous article, they said that the market cap in 2020 was, what was it? $200 billion industry in 2020. Okay. The current market cap in 2022 is $1.8 trillion. And we are just now seeing the beginning of the adoption of these cryptocurrencies. There is more institutional investors just started to invest in Bitcoin and Ethereum close to the end of 2021. So as more organizations understand this Web3 world, they understand blockchain, they understand cryptocurrencies, that number is going to skyrocket, in my opinion. These are my thoughts. And then finally, so again, in 2020, we had a $200 billion industry in 2020, right? There was the 24-hour volume in the entire cryptocurrency market was 101 billion. One day of trading volume eclipsed what that market cap was in 2020. So that's how quickly this space has exploded in just 2 years. Just 2 years. Now, in the current state, last thing I'm going to talk about is you can see the market dominance in the entire crypto market, in the entire crypto industry. Bitcoin controls 41%. Right. So Bitcoin has, so the Bitcoin investors make up 41% of the entire cryptocurrency market. So that's why I say once the price of Bitcoin goes up and down, the market follows. Okay. And then Ethereum only has 19% of the market. So last thing so in terms of volatility, you can see that Bitcoin is down 5% today. If you look at the traditional stock market, that's huge. That's a normal day. That's a normal day in the cryptocurrency market. Okay. Now, one thing we always talk about in the cryptocurrency market is you have to zoom out. Okay. So this is a 1 day chart for Bitcoin. So if I zoom out to 3 months, for example, you can see that Bitcoin is very, 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 very volatile. Okay. So if I zoom out to 1 year, again, very volatile. A year ago today, Bitcoin was at 65,000, right? Now it's at 39,000, almost half, right? So that's why these cryptocurrencies are very, very volatile. And then if I look at Ethereum, again, bad day for Ethereum as well, down 6%. And if I zoom out to Ethereum, you can see that Ethereum a year or 3 months ago, Ethereum was at 3,200. Now it's at 2,900. And then if you look at a year, you can see that if you invested roughly a year ago, let me go year to date. Yep. So year to date, Ethereum is at 3,700. Now it's at 2,900. So now we're in a very down market. People consider it a bear market. I don't think it's a bear market. So you can see that the price of these cryptocurrencies are very, very, very volatile. Now, that's one thing where I say these cryptocurrencies are a long-term investment, where if I go to all time, just in 2020, in 2019, Ethereum was at $344. So if you invested in Ethereum in 2020, now you have an investment that went from $300 to $2,900. So these are not a get rich quick schemes, in my opinion, unlike some people will say within the market. These are long-term plays. These currencies are very, 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 very volatile. And it is one thing that you have to consider whenever you're making investments. But the purpose of this video is just to educate you on the foundations and the history of cryptocurrencies. Now, we are very early, in my opinion, we're still very early on into this cryptocurrency Web3 space, because Web3 is being built as we speak. And as more and more people continue to adopt these currencies will continue to increase. That's all. Until next time.